Good morning, traders. This is Chris Buss with Traders Profit Compass with your morning look at markets for Wednesday, October 28th. Okay, we've had some overnight fireworks. I'm calling it Euro Lockdown 2, as Europe has its COVID cases exploding and a lot of countries looking at some major lockdowns. And also, as our cases are exploding as well. I just saw yesterday that Chicago's going to cancel indoor dining. You're probably going to see a lot of that kind of stuff. I don't think we're going to get to the massive lockdown stage, but we'll see. It certainly put a scare into the markets. So we'll have to see how this plays out. And of course, election volatility is mixed all in that soup. So it's the VIX is north of 35. So I'll have a comment about that in a moment. A couple things from the blog site before I get into the charts. Bank of America put together a really nice graphic on the different potential outcomes from the election. For instance, a Biden victory and a Republican Senate, a blue wave, a Trump win and a blue Senate, all that kind of stuff linked to stimulus and potential economic fallout or ramifications from that election. And I think it was just a real nice graphic that put together and summarized the outcomes pretty well. Also, I posted the put to call ratio. You remember yesterday we saw the first inkling of fear on put buying after Monday's drop. Well, they came back yesterday and went right back to extreme call buying. So that only lasted a day. Those people are probably going to get run over today, so that's just the way it goes. We'll see, how the day plays out, but I'm watching that put-call ratio. It hasn't been very good lately because people just keep buying calls, but there'll be a point where you'll see some put buying come in, and then that may be helpful to us as we try to get a tradable low. Also, one thing on volatility. I mentioned that the VIX is north of 35. So what I want to caution you about, even if you're inclined to say, okay, I'm willing to take the election risk and I'm going to put on some trades that go into next week and beyond. Number one, you're going to be paying a big premium for whatever calls or puts that you buy. If you're initiating a new position, I highly recommend that you put on a spread. That way you're selling some high vol along with the premium that you're paying. So after the election, you can almost be assured that there's going to be a volatility crush. I don't know how much it might be, but it could drop, into the low 20s. Right off the bat, if there's a clear winner. If there's a contested, maybe it holds in there, but I still think vol is coming out. Now, if you had put on a directional position, say a week or so ago, when the VIX was, say, 26 or 25 or 27, and now it's 35 or 36, what you can do is spread that position now. That way you're going to be selling a high vol strike against your long strike. You're spreading it. So you're going to be collecting an outsized premium now for whatever strikes that you may sell. And that way, after the election, when you see that vol crush, it will insulate or help insulate your directional position. So If you're crafty enough to do some put spread or call spread selling, I think those would be good strategies as well, because you're selling you're selling options at a higher volatility, and then when that volatility crushes, you'll recoup a lot of that premium. So that would be to your advantage. So be careful on straight directional bets that are not spreads. You could be 100% right, but then be wrong, because as volatility comes out of your options, they're going to be worth less. So be careful about outright directional bets that are not spreads. Okay, let's get into the charts. Going back to the 4-hour on SPY, futures are down like 400 points on the Dow. I think it was down about 43, 44 points on SPY. We are right down in this 333 area. To my eye, this 332.50 is really important. As we talked about yesterday, this level is the 618 retracement of the advance coming back. That aligns well with this high volume over price support area here. So the area at the end of the day is really important. If this holds, in fact, I expect somewhat of a bounce here. Maybe we bounce up a little bit and then come back and test it again. But if this 332.50 breaks, then there's not much below to stop it from 325. You've got an open gap here, which I don't really think will provide much of a support level. At the end of the day, if this big level breaks, I would expect at a minimum that this fills down to 229, right in there. And then, of course, if that breaks, it's down to 325. So in my mind today, all eyes are on 332.50. Now I'm going to jump to QQQs and skip over the SPY 30-minute, mainly because with the overnight drop, my charts have not rescaled yet. So, where price is now is not in view. So I'm going to jump to the Qs. And in the pre-market, Qs have been holding up pretty well. They're trading at about 280, maybe 279. You'll remember from before, that was our prior trading range level. So today, I think above 280 is constructive. Below 280, I'm looking for a move down to 275, which would fill this gap and bring it down to this 61.8 retracement level. And that's my favored scenario for this to come down and basically back test this prior low from Monday right here at the top of the gap. And I think eventually, when it's all said and done, I think this gap fills down to 275 in the 618, and then we'll see, if that holds at that level. But that's what I'm looking for here on the Qs. You can see it here really well. Here was our channel low on Monday. Got the bounce up to the top of the channel. That has been rejected in the overnight session. We are back here at 280, and in my mind, that has to hold, or we're testing the top of the gap again, with a likely move back down to the channel low with the fill of this gap at 275. And if I were short, if I got short yesterday, obviously, you're well to the good. That would be a place to cover at 275 for sure. I would be watching really close here because that's going to be a well-defined support level. But definitely if that breaks, I would be looking to cover that at 275, and then you'd have yourself a awesome trade there. IWM has really fallen apart. Anybody that was on the ball and interested, this break of 160 the other day, and even you got a second bite at the apple on the back test of 160, that has really let go and has gapped down and is sitting in this area here on top of this gap right at about 155, 155.50 in this area. So when price opens, it will be sandwiched between the gap above and then this $1.50 gap below. What I think will happen is we've got a 50% fib level right here at 153. I think at a minimum, this is going to fill this gap and come down to the 50% fib level. I would anticipate a bounce there. But if that does not hold, your 61.8 retracement is back down towards the bottom of this box at 150. That would be your next objective if 153 broke. Same thing on IWM 30-minute. I can't show you that, so I'm going to jump right to the FAANG names. Facebook, the last time I looked, is set to open right around 280. And then I think this 278.75 is your key level here to look for either a bounce or weakness back into this gap. You've got this uptrend line here that should act for support. And remember, the earnings for Facebook is tomorrow. And I think for the FAANG names that have not reported, Amazon, Apple, Facebook, Google, you may find that they're not going to react quite the same as the broad market would lead you to believe. They may let go, but there may be an anticipation effect for earnings tomorrow, and maybe that holds them up a little bit. I mean, for Facebook here, there's a lot of congestion. You've got layers of support, a big uptrend line. It may be hard to get any kind of big breakaway move on Facebook today, even though the technicals may support it with a weak momentum profile and a weak RSI profile. Apple gave up its gains in the pre-market and is sitting right at 115. This is a nice setup for me. We had 115 identified as a go, no-go level, bull-bear pivot point, and I think that holds today. As long as 115 holds, anybody that's long is fine. But I think if 115 gives up the ghost, I think you can get 113 pretty easily. Come back down here to this low on Monday, and I think that would be a nice trade right there. It's clearly defined, and bottom of the box, nothing in the way. I think that's an easier move to make than Facebook, that's got all these intermediate levels in between. Tesla, we've had these three levels identified: 410 support, 420 pivot point, 430 resistance. In the pre-market, I had Tesla trading at around 418. Same game plan. Above 420, you can get long and look for 430. That worked yesterday. But below 420, you got to favor 410. And if by any chance 410 were to break, then 390 is your next level. I don't have it penciled in here, but 390 is a level that goes way back on the daily chart. Microsoft, good report, bad result. It's given up all its gains from yesterday, and when I last looked, it was trading 209. So when it opens this morning, there'll be a big gap above, and below is your target at 205. So anybody's guess which way it goes, but you've got this 209.50 as your bull bear pivot point. If it jumps above, you can get long with a stop just below and look for a gap fill, or stay short right here and look for a fade with a stop just above. Now that earnings is out, it's going to trade the way it wants to trade. There's not going to be, an underlying anticipation bid for tomorrow. So it's going to be a lot freer to move, as the market sees fit, rather than the ones that have earnings tomorrow, at least in my view. Amazon has held up pretty well in the pre-market. Again, I think it's because of earnings tomorrow. Trading right here at about 270. If you were to break 3,300, I think you got room up to this 33.35. If you lost 32.50, then 3,200. These $50 increments have been working great. So I would use this 32.50 as your bull bear pivot, as long as it holds in the pre-market. If you're motivated to be long, you can be long against 32.50 with a stop just below. Nice momentum profile, nice RSI profile. These are favoring higher, but we'll have to see with the market down this morning. Google, trading down pretty significantly, down about $30 as far as I could tell. Pre-market down here to 1570. That's your high volume over price support bar. That's your bull bear pivot right there, 1570. Above, you can look for a gap fill. Below, you're looking for 1540. So you're looking for $30 on either side of the of this pivot here for a move today. Netflix, very stable in the pre-market. It's carved out this little range between 490 and 480 for the last several days. I think 490 is your pivot for higher, keeping in mind you've got this downtrend resistance line. If it runs into trouble there, then you can be short and try for 480. This looks to me like it's in consolidation mode, and to get a bigger move, you're going to need to see a break either higher or lower out of this box, and then that'll set the course for the next bigger move, either up to fill this gap or down here to 465, which is critical support. XLB, you're going to see that trade down today. That's a COVID reflation trade. If you were motivated to do something with that, I think you can get short against the 50 here at more or less 64 and look for a move down to 61 at the September low. You can see momentum is really coming out of it as we go forward. Financials, I got an alarm on this yesterday. We had been looking at this 24.25. It broke. I'm sure it's down sharply in the pre-market. I got my alarm at 350 yesterday, and I wanted to get short so bad, but then I'm figuring, I'm basically shorting for 2 days, which would have paid off, but I didn't do it. This is we're at a really delicate time tactically. We've got turbulent high vol market conditions, and we've got the election. So you say, I don't want to short something, for 2 days, or you go out a week and plan on closing it Monday or Tuesday before the election results and that vol crush that we just talked about. It's a really delicate situation. I respect anybody that either wants to give it a shot or just says, I'm going to step aside, or just try to day trade, which is what I've been doing. I'm just at the point where I don't want to, particularly mess with, any kind of duration trades. There's enough volatility going on right now that I can capture during the day. And that's the way, I prefer to play it, just, now in front of the election. But if you're, if you don't have that option, if you're working or whatever, or don't feel comfortable intraday trading, I respect either position or either approach of trying to do something quickly with short dated options, or going out to next week with either a spread, as we already discussed, or a directional bet that you close before the election results on Tuesday. That way you won't have the vol crush. I think VIX will hold in there until Tuesday, and then Wednesday I think you'll start seeing vol come out of the system. XLI is another COVID exposed sector. Lost to 50 yesterday. I'm sure it's going to come down here to 76 today. Maybe it's already there. And then if that breaks, you're going to test this September low and then possibly come down here with a chance of holding 76 if the market stabilizes right there at that 332.50 area. Got a few charts to show you. This Fix, they're a business support services company in the industrial sector. Had a big gap down yesterday, right down to the 200. Notice there's a big $4 or $5 gap here yet to be filled from an August gap up. I'd set an alarm at the 200. You may get a bounce right here, but then a continuation of that move to fill that gap. That would be a nice trade to capture if you're interested in that. Yesterday I screwed up and showed the DraftKings chart, but it wasn't in the viewable area of the video capture. So here it is. Here were the two levels that I was talking about. 42.50 was the breakout level, and you've got the uptrend line. It broke both of those supports. Now the technical target is 31 at the bottom of the box in this value area. If we were to get a kickback to 42.50, I would be a motivated seller there, because then there's going to be dual resistance as well. Plus, you've got all the fast-moving EMAs going to be resistance as well. I think that would be a very objective, low-risk short with a short against 42.50 and a stop just above. DXCM earnings yesterday, big gap down, fake breakout Monday, gap down Tuesday, inside this $35 box. So I would be alarming this 375 for either a hold and a move back up to the top of the box, or a break with a target of 340. And with earnings out of the way, you don't have to worry about that anymore. So now it's just pure trading, and 375 will be your bull bear pivot point. Roper, industrial sector, gap down, tag of the 200, key support at let's call it 382. You've got what looks like a little baby head and shoulders here. Not perfect, but good enough for government work. You've got declining momentum, declining RSI. If 382 were to break, you've got a big price void here. You would already be below the 200. And I think you're going to find this 345 area rather quickly if this 382 doesn't hold. That would be a nice one to capture. So I would alarm in the neighborhood of 382 for a potential trade here. Lastly, Bitcoin. This thing is really starting to move. I featured this chart several days ago. It is broken out. If you look on the actual Bitcoin chart, which I don't have, 14,000 is a resistance level, but after that, it's 22,000. And what you're seeing, there was another company, I forget the name of it, but yesterday bought a bunch of Bitcoin to put on their balance sheet. And so, PayPal and Square are, started leading the way on, incorporating Bitcoin into their platforms. And now you're starting to see other companies, just buy a chunk. Buy 25 million and just drop it on the balance sheet and let it sit there. And as this thing appreciates, then that's going to be, like this massive store of value on their balance sheet, they hope. But what it's doing, it's sucking some major supply, off the market. And, unlike the Fed, they're not really making any or very many anymore. I don't know the details on how that mining goes, but it's a scarcity value. And if you got companies, buying $50, $100 million at a clip, and just parking it, then, you know, that's going to be a demand factor, you know, a demand factor on one side and reducing supply on the other side as they park these coins on their balance sheet. So, you know, that may be a massive catalyst going forward. So stay on top of that and consider, you know, doing some trading, or if you're, you know, a buy and hold type investor, you know, for that asset class like gold, there may be some massive legs to that trade just on a fundamental supply and demand basis. Okay, that's all I got for this morning, guys. Watch the volatility. If you're comfortable intraday, I think there's a lot of nice trades you can capture. I think I've identified the levels really well for you. And that's what I hope to do for you. I can't execute the trades for you, but I can set the table with some nice, reliable levels. And I think they've been working really, really well. So focus on your execution. Sell at resistance, buy at support. It's a tried and true formula. When you see these bounces that head back into the teeth of resistance, it's an objective short. And if you get the rollover and you go back down to resistance, simply cover it. Don't look for the, you know, the grand slam. If you sell at support and then that support breaks, you simply reinitiate. And then you have, again, your low risk short where you've already taken a chunk of your gains off your original position, and then you can reinitiate that short on a break of support with a stop just above, and then you can look for the next level below. And just reiterating, if you do decide to take a duration trade in the next week past the election, please buy a spread, because you're going to get vol crush. And if you're just hanging out there in space with a simple put or a call, you're going to lose a lot of premium when the vol comes out of those positions after the election. So buy a spread. That'll insulate your position to a certain degree by selling that high premium call or put out of the money. I hope you like the content. We're getting some new subscribers. I really appreciate you being here. If you're new to the channel, hit the subscribe button. I'll keep you posted often with updates, both midday and after the market when things develop. Hit the alarm bell. You'll get that notification. And over in the show notes are links to the blog site where you can look at that Bank of America graphic and the put to call ratio and other commentary that I have, and a link to subscribe to all my content. And as a bonus, if you do that, you'll get a quick link to the trading room where you can join myself and the rest of the gang. Got a lot of good traders in there. I think you'd really enjoy it, and it would benefit your trading greatly if you were there, gleaning trade ideas and expanding your trading network with the girls and guys in the room. So have a good day of trading. This has been Chris Buzz with Traders Profit Compass. Talk to you next time.